Hi, I'm Larry Micarenda, and welcome to this edition of Suffolk County Money Watch with Suffolk County Comptroller Joe Sawicki. Joe, we're wrapping up the end of summer, sorry to say. We don't want to see the warm weather go away. So many things going on with the county, and we decided today that we take a few emails that we get from people who are watching the show, things that, clarifications that they wanted. Now, the Comptroller's office that, you're the head guy in there, heads up all the audits, finds out who's not spending the money correctly or who's, taking too much money. Can we tell the public a little bit about that, what you do?
Sure. A lot of people often ask, okay, what's the controller of the county do? What's the controller of the state of New York do? What's a controller do in general? How does a county controller differ from a controller in a corporation, in private entity? And the job of the Suffolk County Controller, or any municipal controller, like the state controller, Tom DiNapoli, is to basically ensure that public funds, taxpayers' funds, are spent properly. I mean, that's the auditing side. And as I look back, just this afternoon in anticipation of the show, we were putting through a quick summary of the audits we did over the years. I've been in office now, I'm in the middle of my 11th year, and we have recouped for the taxpayers a little over $21 million in audit findings. Almost $10 million have already recovered in cash. Some of the times when we audit, whether they be some agencies funded by the Department of Social Services, sometimes we do Medicaid type of audits. That's a whole different issue for the whole show.
Another show, yeah.
We do audits of other departments to see if they're collecting monies in accordance with the county charter and the county and state laws. We do performance audits to make sure that county departments are operating the way they're supposed to be in accordance with county laws. So all in all, when you take all the audits together, and sometimes we audit misfindings where we get a tip that people were improperly spending taxpayers' money, we go in and we'll ultimately, if we find something that we feel is criminal in nature, we'll refer it to the district attorney, Tom Spoda, for prosecution. But all in all, we found a little over $21 million in 10 and a half years that I've been in office as a controller. Got a great staff, I got to tell you. It's like you're only as good as the staff that are behind you. And of my auditors and accountants, over half of them have maintained and earned their certified public accountancy. So they're CPAs. They're very professional. They take that goal and achievement very, very seriously. And even as such, along the lines of doing the audits, we're even recognized our accounting side, because the controller's office, I'll explain in a minute, is very varied. But on our accounting side, that was the auditing side. On the accounting side, we have to prepare the financial statements for the county every year. We keep track of the general ledger. We keep track of the county's expenditures. We keep track of the payroll. We keep track of the borrowed funds. Probably 80% of the financial operation of the county is in our office, in the office of the controller. And that's something that our financial statements are very important, because our financial statements are used every time we go to Wall Street to borrow money to financial institutions who want to lend the county money, whether it be short-term money, whether it be long-term bonds for our roads and bridges. And as such, the preparation of our financial statements and their quality is extremely important. For the 29th year in a row, we've been awarded just this year the Certificate of Achievement in Excellence of Financial Reporting, the Certificate of Achievement in Excellence in Financial Reporting. That's by the GFOA, the Government Finance Officers Association of the United States and Canada. And that's a very prestigious award, 29 years in a row, 11 years under my watch, if you will, and 18 years under my predecessor, Joe Caputo, when he was county controller. So our staff is very dedicated. They do a good job. And all this reflects well for our taxpayers, because it reflects well on the financial operation of the county. And therefore, when we go to borrow money, we can borrow money at extremely low interest rates. And it's not only because of our bond rating is good and our note rating is good from Wall Street, but it's because our financial operation is good and it's solid. When I talk about borrowing money, we borrow on average about $625 million a year in short-term notes. And we do that for cash flow purposes. We borrow tax anticipation notes in late December for the following year until property tax collections come in June and July from the towns. We borrow short terms in terms of revenue anticipation notes, which is sometimes it's emergency borrowing. And in terms of long term, we borrow anywhere between 120 and 150 million dollars a year for our county jail, for our repair of our roads, and capital projects and the like. And these are all important numbers, and they're big numbers. They're big numbers for Suffolk County. Suffolk County's big business with our $2.8 billion annual budget. It's big business, and it's so important that our financial operation be professional and be of the highest quality and the highest caliber out there.
And our first question, our first email, Joe, was, is there any county department that you do not audit?
We have the authority to audit every county department. We do as much as our resources allow. Audit as every county department. It may not be every year because we don't have the resources. I mean, one thing that I'm grappling with and Tom Spoda's grappling with as the chief law enforcement official of the county, elected official, is that resources. There's been so much in cutbacks in government these days, on the federal level, on the state level, on the county level. For instance, when I took office in 2003, our staff was 90. We're down now to 65. And what it's all about is we have to learn to do more with less. Taxpayers can't afford bigger and bloated government, so we should do our best to consolidate. We do our best to do as finite job as we can with our auditors, and of course that means you go out and you target where the big money finding areas are for the taxpayers. I mean, I could have 20 more auditors, and one thing about having auditors is their audit findings pay for themselves, pay for their salaries.
Right.
And that's a good thing, but at the same time, when the county executive and the legislature has to vote on the budget, they have a certain number that they have to meet too, because when you start funding a budget, whether it's auditors or more criminal prosecutors and assistant district attorneys or more police for the police department or for the district attorney, there's a line you have to draw of what the taxpayers can afford. But the one good thing that I'm proud to share with Suffolk County taxpayers is the auditors we have probably double their salary and what their findings are for any given year. And that's a good thing because they're charged with finding misspent money out there and making sure that however the money's being spent by the county, it's spent properly.
Now, the second email that we had pertains almost a little bit to the first. Now, we know that you can audit any county department. Now, what about other businesses and everything that do business with the county?
Well, if there is county money that is spent anywhere, we can go after. We have the authority by the county charter. We have authority by state law. I mean, state law dictates that the county controller, Suffolk County controller, is the chief fiscal officer of the county. The county charter sets up, from decades ago, the county controller is the chief fiscal officer of the county. So wherever there's a dollar spent, we can go in and do the audit. So, for instance, we are auditing now the various contractors and subcontractors who charged the county for Superstorm Sandy cleanup. And there's not a lot I can say right now on the show, Larry, about that because the audit's ongoing.
Right.
But I know that the district attorney, Tom Spoda's office, has a major investigation into the contractors and subcontractors. We're assisting him in auditing their claims and their vouchers and where they seek payment for the county. And it's a long process, but it's a very important one because there was millions and millions of dollars spent by the county. And separately, the towns have their own issue with investigation with the district attorney, where we don't have the authority to go in and do and look at the towns. But in terms of the county level, $22 million have been spent by Suffolk County. A lot of it will be reimbursed by FEMA. 90% of it will be reimbursed by FEMA, but that $22 million is what the net cost of Suffolk County is going to be. So it's important that this be audited and that taxpayers know that their money went and was spent properly by all the subcontractors. Because a lot of contractors came from out of state because there was such a demand across the whole Northeast when Sandy hit. And the county just had to reach out and get contractors and cleanup people from wherever they could. So this is an ongoing investigation by both the district attorney and ourselves. So that's one instance where we audit taxpayers' money and Suffolk money going to individual businesses and individual contractors.
Yeah, and in the past on this program, we've had audits that were done to the phone company that you found a lot of money, LIPA, police department. I don't think anybody has escaped the audits. Which brings us to our next question, Joe. Was how's your cooperation between these other departments, the county executive, the legislator, the DA's office, and stuff like that?
Well, as the controller, once you're elected, I feel as though it's crucial to put party labels aside, and you work for the benefit of the taxpayer. Our salaries are paid by the taxpayers. My entire department, all their salaries are paid by the taxpayers. And it really doesn't matter to us which party is in control of the legislature, which party is in control as the county executive. What matters to us is that we get the job done. And when we go and do the borrowings, we want the best and lowest cost interest rate for the taxpayers, for Suffolk County government. And to do that, we have to work with the county executive. And we have to work with the budget offices of both the county executive and the legislature. Over the years, I pride myself on having a good working relationship with the county executive. Now, County Executive Steve Ballone, with the legislature and its presiding officer, Bill Lindsay, the budget review office of the legislature. And so it's not about politics, it's about good government for the people, because we don't have to look any farther than Washington to see what a mess it is down there in terms of politics trying to run the nation's
Or the
business.
state of New York.
It's horrible. The state of New York's not too far behind either. And I got to tell you, I've enjoyed a good working relationship, and in both ways. I think the legislature and the county executive will say the same about our office. Again, we try to be professional, and we try to always keep in mind that we're working for the taxpayers.
And through the years, especially since your years of being comptroller, all the money that you've helped not only in savings but bringing back to the county when the county was overcharged for something, or you found another department, maybe they were spending money they shouldn't have been spending, or it wasn't allocated properly or something like that. So you've had to go through this whole thing, and especially, unfortunately, Joe, during the worst financial crisis of America, starting in 2008, that's didn't make your job any easier.
No, it wasn't. But we were able to maintain, our bond ratings, very, very well, very, very high they are, and they continue to be high. Although we suffered some hits in the last couple of years because the county's financial position has deteriorated a bit. You only have to look 5 or 6 years ago when the county was, 06 and 07, I believe. We were finishing with $150 to $155 million surpluses at the end of the year.
Right.
Now, that's a big surplus out of a $2.5 billion budget. This year, the county at the end of 13, we're estimating that the county is going to end with a $150 million deficit. So a lot of things have changed, like you pointed out, Larry, since the economic depression, the biggest depression or recession since the Great Depression in the 1930s or late 1920s, since 2008, and we've had to adjust, and hence that's why our departments have been cut back by staffing. I mean, you can't go back to the taxpayers. You cannot raise taxes. People are already taxed, up to their eyeballs on Long Island. It's atrocious, and so the government leaders are trying, Republicans and Democrats alike, are trying to keep, and conservatives and independents are trying to keep spending at the proper level so that people can afford to live in Suffolk County, and it's so critical these days. And so going back to looking back to 2008 and how things have changed, I think our sales tax is starting to come up now a bit, which is a good thing. The economy overall seems to be regenerating itself. We just hope it continues.
But being here on the island, we're the last people to get hit with it and the last people to get out of it. So, the signs of the economy with the Fed and the nation, it's going to very slow trickle-down effect here in Suffolk County. I think you agree with that.
Yeah.
But you have been working with the county legislator and the county executive, as well as the Suffolk County DA, Tom Spoda, and they're all trying to find ways to save money.
Yeah.
Because nobody wants to raise taxes.
Exactly.
So there's been a lot of things and referendums and other things being put out there to try to save the taxpayers' money, because the county just can't keep going back to the well anymore.
Exactly. And the county executive is and the legislature are, and with our office, we're constantly looking for ways to cut back on the county budget. And I think that consolidation, I know the county executive has already consolidated a lot of departments, and he's got more to go. Wherever you can attain cost savings, that's what we have to do for the taxpayers. That's what we have to do for the government. It's just gotten too big. and too unaffordable. I mean, you look at Albany and Governor Cuomo, whether you like him or love him, he's done a good job up there in terms of keeping the state budget under control, and he's consolidated. I think the most recent large consolidation was, I believe it was the Department of Banking and the Department of Insurance. They merged it under one. I don't recall what the new commissioner's title is, but again, these kind of mergers where you can effectuate smaller government, leaner government, and doing more with less. That's the line these days, the common line. We have to do meaner and leaner government, and we have to do more with less.
And by doing these office mergers like Steve Ballone has done before in the past with some of the county departments, the savings there. And a lot of people just don't realize that, when the numbers come out, Joe, and you're the numbers man, so you should know this. People will say, hey, it's only saving $1 million this year. That's all you're doing is saving $1 million. People don't understand that, you as basically the county's fiscal officer, okay, and the county executive, you can't just look at this year. You have to look down the road on what's going to happen. So if you say, hey, we only saved $1 million for this year, well, in 10 years, isn't that $10 million?
Absolutely, absolutely. And I think it was there was a recent very controversial debate over a referendum issue and a consolidation issue. And I think it was legislator Lou DeMauro from Babylon and Huntington area that said, we're not going to solve the county's $150 million deficit with one resolution or with one consolidation or with one project. We are going to find $150 $1 million savings. That's how we're going to bring our county budget under control. And I totally agree with them. It's a lot of piecemeal stuff, and it's not going to be just 1 year. It's going to be if you consolidate, when you move forward, as you just pointed out, if you can save $1 million a year over the next 10 years, that's $10 million.
Right. And then as we go further, there's other measures right now that are in the county for the county executive and the legislator to consolidate more departments to save the taxpayer money, because they just, and like you were saying with the bond rating and everything like that, when the people who do the bond ratings on Wall Street, like we've said before, in the banks, and they see that the county is cutting down their lean and mean, aren't we going to get a better interest rate from that?
Oh,
absolutely.
Better bond? Absolutely, absolutely. The one of the major consolidation proposals by the county executive, which was recently passed by the legislature, is a referendum on merging the two financial offices of the county. I kind of just described what the controller's office does, and along with the auditing and the borrowing of the money, the controller, again, does about 80% of the financial operation of the county. The controller does the county's payroll for all its current employees and its retirees. It pays the county's bills, about 250,000 vouchers or invoices a year we process. We prepare the financial statements, as I indicated before. We do the borrowing, and so that's one financial operation. The other financial side is the treasurer's office. The treasurer's office is basically administrative, and there are 37 employees over in the treasurer's office, and plus 5 people in the hierarchy, the treasurer and a couple of deputies and a couple of secretaries. So what the county executive has proposed is merge the treasurer's office under the controller's office, and actually after the year 2014, call it a new office, call it a Department of Financial Management and Audit. There's, when he announced this proposal, when County Executive Ballone announced this proposal, it sent a lot of shock waves throughout the county government, because people said, wait a minute, this is heavy duty. You're going to merge 2 financial offices and with 2 elected positions, because the treasurer's an elected position also, and always has been. And then we sat back, and it was Bill Lindsay, the presiding officer of the legislature, who asked us to do a study to see, can this work, look at its effectiveness, and look at the ultimate, will it accomplish the ultimate goal that the county executive wants? The county executive initially thought we were going to save $1 million a year or more, and he was not far off. So we did an analysis. I asked my top certified public accountants in my office, my chief auditor, and some senior investigative auditors to really spread out all the duties and the functions of the treasurer. And for those who don't know, the treasurer basically collects the money from the county. It's a ministerial type of duty, collects the money, the sales tax revenues coming in, the money from the departments coming in. There's very little cash these days. Cash is collected out. For instance, when people pay their park fees for the beach or for the golf course for the day, that's the kind of cash that's collected out there. But then that's immediately put into a bank account, and the bank account then transfers it over to the county treasurer.
Right.
So So the county treasurer then invests the money. I mean, there's not much investing to do these days because the interest rates are so low. And then ultimately, the general ledger on the income side is prepared by the treasurer, and all the delinquent taxes are charted by the county treasurer, people who don't pay their property taxes on time, and then they assess according to law, which everything's all set out according to law, the interest and penalties in the Suffolk County Tax Act. So you can see it's a very administrative, ministerial duty. We looked at it and we felt as though that this consolidation of the two offices can definitely work, can definitely save taxpayers money, and I think it's got to be on the forefront of the county executive's agenda right now that this can definitely be another consolidation which can save not only $800,000, we estimate it's $833,000 in 5 positions.
Now, Joe, the thing that gets me is how many other counties in New York State or elsewhere have 2 financial officers?
Well, that's an excellent question, Larry, and an excellent point. Believe it or not, Suffolk County is the last of all 62 counties in the state to have 2 elected positions. Even Newsday has editorialized that Suffolk County does not need 2 elected officials and could be consolidated under one. And so this new department, which would the new title would be Chief Financial Officer over the Department of Financial Management and Audit, it makes a lot of sense. I mean, we're the last county in the state to have 2 elected officials in finance. I mean, towns don't have that. It's like the state of New York doesn't have that. You have the state controller of New York, and so it's really an idea whose time has come. And incidentally, when you go back in time and look at this idea of consolidating the 2 financial positions, County Executive Steve Levy proposed this 6 years ago. He proposed it 20 years ago when he was a county legislator. Mike LaGrande, a former Republican county executive, proposed it when he was chairman of the Suffolk County Charter Revision Commission in 1999. It goes way back to the mid-1980s, actually, when people were thinking about consolidating government and putting the 2 financial operations together. And
back then, it was just really kind of like talk. They were just talking about the mechanics of it. They didn't really push for it because there was no type of financial situation like what we've had here since 2008.
Exactly.
And, we can't kick the can down the road anymore.
Exactly. And some of the naysayers back then was saying, you have to have, which is a misnomer, checks and balances between the revenue. That we asked the county's outside independent auditing firm, Ernst & Young, one of the largest firms in the world, to take a look at the study we did and how you have separation of duties and segregation of internal controls. And as long as you have a separate division collecting and depositing the cash and the receipts and all the revenue, as opposed to a separate division spending the money over on this side and writing the checks, and a separate division monitoring the financial statements and the recording, they pass our arrangement and our new consolidation, if the voters approve, with flying colors. This is key, Larry, because you said it's a referendum. What we haven't pointed out yet is that the voters get a chance to vote on this referendum in November, this coming November election. So it's up to the voters of Suffolk County. Do you want to consolidate and save anywhere between $800,000 and $1 million a year? And again, it's a consolidation. What we're losing is 5 jobs for $833,000. 5 top jobs, $833,000. That's a lot of money to pay 5 administrative people and their secretaries to supervise only 37 people. And those 37 people are administrative. And when you look at the new consolidation chart that we worked out, it can very easy. If we're doing 80% of the financial work and accounting work anyway, just taking the revenue collection and the tax delinquency collection done by the treasurer, moving it over into the controller's office and consolidating them into one, it makes a whole lot of financial sense. It really does. It saves the taxpayers $1 million every year.
And like you were saying, Joe, you have a really powerful department, those auditors, because you can, you have carte blanche. You can go and you've done audits with the Suffolk County Police Department, the Suffolk County DA's office, the county executive, nobody, the college,
right,
and in LIPA and the rest that we've mentioned.
The key to this whole issue is that the independence of the controller, or if the voters approve the referendum, the chief financial officer, the fact that the independence is established by a separately elected official that guards the money and does the audits. So you're not subservient to a county executive, you're not subservient to the legislature,
right.
you're not subservient to any political party. That's the main goal here. And those internal controls and that strength of the independence of the office and the integrity of the office of the controller or the chief financial officer, if the voters approve, that's key to any audit. It's called independence. And because no one, as a controller over the last 11 years, I answer to the taxpayers of this county.
And that's
And that's it.
Yeah.
And that's since day one. That's what I've always believed.
And we've done show after show. Matter of fact, next year we'll be celebrating 7 years with Money Watch, and it'll be the longest running county elected official program that's been out on Cablevision and the airwaves, which is a good thing for both of us, I guess. Yeah. But Joe, also, like, the next show we're gonna be talking about the numbers that came in for the summer, some sales tax receipts, stuff like that. We'll have a little bit better fine tuning on this picture. Plus, we'll probably have a little bit more notes, maybe about the referendum or other things that are going to be going on with the county as far as consolidation. Because as chief financial officer, basically, is what you are right now. You got to keep an eye on all those pennies and dimes that are rolling in.
Yeah, that's the challenge we have. And going back to the referendum, if the voters approve the referendum, and again, this is so important that, because a lot of time you see propositions on the ballot, and there's supposedly, I believe, 7 propositions, including casino gambling for upstate New York, which will be important to Long Islanders because of all the casino gambling that is done across the Sound in Connecticut and, of course, down in New Jersey and to some extent into New York City. But voters, I'm finding more and more today are paying real attention to what these propositions are. It would, in the old days and years ago, people really didn't care or follow that much. They just wanted to vote for their favorite elected official. And that was it. Now they really want to see how their taxpayer money is being spent. And when you put up a consolidation and you start talking about downsizing government, I think people want to see that. And I think it's good government, and I think it's good a financial operation. Not to mention, when I say good financial operation, not to mention that it streamlines the financial operation of Suffolk County when you have it under one roof, so to speak, and you have the general ledger in one area, you have cash collection in one area, and it just makes it so much easier to prepare the financial statements. It makes it so much easier to audit, if you will, if everything is kind of. It's no different than a major corporation, major corporate structure, whether it be a Sony Corporation or General Electric. You have one chief financial officer. Why does Suffolk County need 2 separately elected financial officers? It doesn't make any sense, especially now when the taxpayers are looking to cut back and save every dime they can, and so are county officials looking to. That's why this referendum, when it came up before the legislature, before a vote, it had a very significant debate. There were a lot of questions on it. It ultimately passed overwhelmingly 12-3 to put it before the voters and let them decide.
So consolidation, basically, it works. It works for everybody.
It works for everybody. For a good 6 weeks, we studied this hard. We made a presentation to the legislature, and they voted 12-3 to put it before the voters. You can't get better government than that. Let the voters of this county decide what kind of government they want.
Well, Joe, we're practically out of time right now. I want to thank you and the public for tuning in to Suffolk County Money Watch with Joe Sawicki. I'm Larry Mike Arenda, and we will see you right back here very soon on the Government Access Channel. Take care.
This is Joe Sawicki. I'm your Suffolk County Comptroller. If you ever need to reach me, please feel free to do so by dialing 631 in Hopwog, 853-5040, or by shooting me an email at the address as you can see.